More on the market turmoil. I'm joined by Jerry Wattenberg, Managing Director of JTW International. Jerry, first of all, why this week all of a sudden did the markets really spill badly?
Well, I think there were a combination of events. First off, the subprime issue has still been in the market. Second, as was mentioned in the press before, the inability to finance some of these large LBO deals then sparked investors' concern. And then finally, a lot of things had made up a big run. So the equity markets had been higher, the dollar had already been weaker, so you saw a lot of profit taking hit the market.
But it's a second reason, the inability to finance these loans, or at least at cheap costs as in the past. This was really the clarion call this week, because one reason the market's done so well this year is because of buyouts by private equity firms, and that's led to a lot of bullishness about the outlook for stocks. Now what's happening, correct, is psychology is changing. If it's going to be tougher to finance these deals, maybe there won't be as many deals, and therefore the stock market won't be as attractive. Is that the psychology?
Well, it is a little bit. I would have to agree with you in the sense of some of these deals are so gigantic and leveraged so much that when you do have a change in the interest rate that you have to pay, the economics of the deal shift. And also you're going to see much more covenants put into these deals, meaning that investors are going to have a lot more recall. I think the overall growth in the economy and profits are also not horrible. So I would say one is more sentiment besides the overall macro data.
So is this a mini hiccup in the bullish market?
I think it's a hiccup. I wouldn't call it a mini. I think we're probably halfway through what the correction could be. And remember, after we had that correction in February, the markets just, continued their inexorable rise higher. I think people are going to take a little bit of pause right now and start to reevaluate the levels of stocks and also the level of debt where they're buying it.
And on the subject of debt, do you think that the financing will come back at levels that people are willing to do deals at?
I think there's a lot of liquidity in the world, and the interest rates are still not very high. So if these deals come at a more attractive interest rate, there are plenty of bond funds and high-yield funds and other investors who are willing to take, a higher interest rate. There may be long-term investors as opposed to short-term traders.
You expect this volatility to last how long?
I think it's going to continue to last at least till we get some foreseeable, clarity on the data. Next week we have the unemployment numbers in the U.S., and I think the market will be on edge until we get through that, because once again, that will be a barometer of whether or not the economy in the U.S. is slowing down.
So what are you telling your clients at this juncture?
I'm telling them to stay calm, look at the overall macro picture globally, realizing that while the U.S. is having problems, globally, China and in Europe, growth is still there. So maybe diversification outside the U.S. into Asia and Europe might make sense, and also pick your levels of where you want to buy things and stick with it.
Jerry Wattenberg, Managing Director of JTW International, as always, thanks for joining us.
Thank you.
Now let's turn to